Welcome to the Daily Block, the top events from the last jet in crypto and why traders should care. Short, snarky, and profitable seeking. Let's go. Grayscale enables staking inside US spot ETPs for ETH and SOL. Grayscale quietly turned on staking rewards for its ETH and ETH spot Ethereum ETPs through institutional custodians and validator partners. And its Solana trust GSOL just activated staking too. That means brokerage accounts can now collect staking yield without messing with on-chain wallets, keys, or your usual chaos. This showed up as asset managers jockey ardor in the ETF and ETP race, trying to juice product appeal with yield attached. Why it matters for crypto investing. Staking inside spot products adds a yield layer that can siphon liquid supply into custody and increase inflows. Expect less tradable ETH and SOL available on market, which can turbocharge price moves. Next up, Bitcoin makes a fresh all-time high, $125,000, plus whale profit taking and rapid flows. Bitcoin ripped through $125,000 over the weekend, and on-chain activity spiked. Whales moved huge stacks. For example, one transfer of 1,550 Bitcoin into an exchange, about $200 million, while exchanges saw heavy realized profits, roughly $838 million cashed out in 3 days. After the top, there was an immediate chop. Mid-size holders look like they're nibbling, while the big whales were distributing, a classic distribution before dip script. Why it matters for crypto investing. ETF-driven macro flows are pushing price discovery, but concentrated whale selling at the highs creates violent intraday liquidation risk. Watch exchange inflows and big addresses for short-term reversal cues. Next up, crypto ETPs hit record weekly inflows, $5.95 billion. CoinShares reported a record week, $5.95 billion poured into crypto exchange-traded products, with about $3.6 billion into Bitcoin funds and strong flows into ETH products, pushing total AUM for crypto funds above $250 billion. That's not retail FOMO this time. Those are institutional rails and allocators funneling real capital via the easiest wrapper possible. Why it matters for crypto investing. Sustained ETF and ETP flows are the structural rocket fuel underpinning the current run. They change liquidity dynamics and can keep majors elevated even when retail rotates in and out of smaller alts. Next up, Dogecoin ETF Doju goes live. Meme coin gets the broker-friendly treatment. The first US Dogecoin spot ETH Rex Osprey Doji launched, giving retail and institution investors access to Doge exposure through brokerage accounts, arrays, and 401k type channels with no on-chain custody required. This is a regulatory and narrative shift. A meme coin sitting on the same trading desks as blue-chip ETFs, and that can drag in capital that never touches a crypto exchange. Why it matters for crypto investing. Lowering barriers for big money into Doge amplifies meme volatility and can cause headline-driven rotations across meme names when ETF flows move or news hits. Next up, Binance lists Aster after a massive rally. Wash trade flags get waved. Binance announced spot listings and a perpetual for Aster after a blistering roughly 1,900% move earlier this month, and other exchanges followed. But Tefilama's founder flagged suspicious volume patterns, and some venues started delisting or pausing data for Aster futures pending investigation. Classic red flags for wash trading and manufactured liquidity. Why it matters for crypto investing. New listings mean short-term liquidity and pump potential, but wash trade signals equal extreme danger. Fake volume and thin liquidity at the tails can create instantaneous dumps on the next sell trigger. Next up, Japan's surprise leadership win weakens the yen. Risk on flows into equities and crypto. Japan's ruling party picked Sanai Takaichi as leader, pricing in looser fiscal policy and delayed Bank of Japan normalization. The Nikkei jumped about 4.7%, and the dollar climbed past 150 yen. Traders are linking a weaker yen and dovish policy bets to cross-asset risk appetite, and some of that money is finding its way into crypto as part of a broader risk-on move. Why it matters for crypto investing. Macro flows matter. A dovish Japan and weaker yen boost global risk appetite and can amplify crypto inflows, sustaining rallies while the macro backdrop stays friendly. Next up, Remitix Pay 5 pre-sale trending. $27 million raised, 30K and early listings claimed. Remitix, a tokenized remittance and Pay 5 project, says it raised about $27 million in a pre-sale, launched a wallet beta, claims 30K verification, and boasts early listings on a couple of smaller X's. The team pitches real crypto-to-bank rails across 30-plus fiat corridors and has referral incentives turned on, which always gets retail excited. Why it matters for crypto investing. Audited presales with promised early exchange listings attract fast retail flows. Big upside on listing, but also massive listing risk and pump and dump potential. Treat marketing claims with heavy skepticism. Next up, Unity Android vulnerability patched. Mobile crypto users at risk unless they update. Unity patched a long-standing Android vulnerability that could let a malicious app force a Unity game to load a rogue native library and inherit app privileges. A nightmare if your phone runs wallets or apps with broad permissions. Because many games ask for lots of device access, the bug could have been used as an attack vector against mobile wallets. Devs and users are urged to update now. Why it matters for crypto investing. Compromised phones mean hacked wallets, phishing, and exit scam risk. Keep apps updated and consider separating games and self-custody wallets on different devices to reduce exposure. Alright, quick actionable takeaways for day traders and Reddit degens. Watch ETF and ETP flows and daily exchange BTC inflows and outflows. They are the macro tide moving prices. Monitor Grayscale staking headlines for ETH and SOL. Staking locks up supply and changes available float. Be very cautious on hot pre-sales and new listings like Aster and Remitix. Wash trade flags and hyped marketing are common. Size down and protect capital. Track whale transfers and exchange deposits in real time. Big moves there can trigger rapid squeezes and flash dumps. Update mobile apps and consider separating custody devices after the Unity story. A compromised phone can ruin your portfolio overnight. If you like this, smash that subscribe button for daily snark and on-chain receipts. I'll keep digging so you don't have to scroll through 10,000 OpenSea floor bids and Reddit memes to see what actually moved markets. That's today in crypto, where the gains are imaginary and the pain is real.